And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. And this is the show where we put you in front of where the action is in the broader markets. Let's go ahead and jump right in. Take a look at what we are going to be covering today. As usual, we are going to drill down, take a look at the broader markets and where we are. This show, the main primary purpose here is to provide you with a framework so that you can be better prepared for next week. We are going to be covering where the broader markets are and uncovering potential rotations that are taking place. It's kind of an interesting juncture as to where we are at this point. We're going to take a close look where precisely the strength is. As mentioned, this past week, we are seeing some interesting shifts in dynamics that you'll want to be aware of as we go into the certainly big earnings week next week. And we're also going to look at using what I call the percent gainers screen. And really, quite simply, this is from that initial interface page on stockcharts.com. I'm going to take you through each of those 10 stocks from today that were up on that S&P and share with you really what intel you can gather from a quick glimpse. We're going to drill down there. Also, earnings season in full swing. So we had a pretty busy week this week. We're going to take a look at some of those names, but boy, next week it heats up. And I believe it's going to be really a very telling week. So far, pretty solid on the earnings front. So we're going to get into that. And then also gaps up on earnings. We've seen a couple of them, and we're going to not only look at names that have gapped up this week, we're going to go back historically and take a look at some of the names that have gapped up over the last several weeks to help you prepare as far as knowing what to be on the lookout after those gaps up. So let's go ahead and start. Take a look at the markets. We're looking here at a daily chart of the S&P 500. And of course, those of you that follow this show know that I pay very close attention to these simple moving averages. So this green line is your shorter term 10-day. Purple, we have 21. And then we have this all important from my work, 50-day simple moving average, what I like to call the line in the sand, because we do want the broader markets to continue to find support here, not only well, certainly from my work, but also it is something that institutions pay close attention to. Those of you familiar with my work will know that for over 15 years, I worked very closely with top portfolio managers and analysts around the globe. These are the guys with the big money, so you're going to want to pay attention to some of the metrics that they also pay attention to. So we can see the S&P 500 did pull back yesterday to that 50-day. Good news is it did find support. So we're in pretty good standing here. We can see that this RSI, that's a relative strength momentum indicator, it got awfully close to closing down below that neutral 50, but it did rebound. Certainly today's action was quite constructive, where we were down and the markets were able to recover and actually close up on the day, and that's quite bullish. We can also see that the stochastics were very close to turning negative as well. We did get this at this net neutral 50. We did get a little bit of a slight reversal here. So really in very fairly good standing going into next week as far as the broader markets action, certainly given the fact that we do not have a stimulus package in place. There have been noises, but nothing actually taking place. And then, of course, COVID-19 cases, unfortunately, are continuing to increase. I would argue that we've held up remarkably well given some of these negative headwinds, and then also the uncertainty surrounding the elections. So let's go ahead and take a look at the sectors, because of course we want to know beneath the surface really what is going on, really what happened last week and beyond. So what we can do here is take a quick look, candle glance. We're getting a 2-month daily price chart of those 12 sectors, and then also the S&P 500. I've gone ahead and added this RSI indicator descending. I want the strength to be displayed up here on this upper left quartile, and then this weakness is going to be down in this area and a whole lot in between. So let's take a look. I want to share with you the utility. It was the second best performer this week with the broader markets down about 0.3% for the week. We can see that utilities, they were up 1.2. Just a quick note, some of you may and very naturally view a move into utilities as defensive. Actually, I'm going to wait until we move further into the show to share with you where that movement is in utilities. And it's all about actually renewables and that area of utilities. So industrials up here in the forefront. The group overall was down a little bit more than the broader markets, but it's still bouncing around up here. We are still seeing firmness, a continued rotation, a couple of big names in industrials that are due to report next week. We have Caterpillar, 3M, and others as well. Let's take a look because commercial services, this is one that we have been watching over the weeks because it really was not participating in the broader market and some of these other stronger areas. We had this deep pullback here that was beyond that September pullback. Good news, it is perking up this week. I'll tell you, it was the top performer, up 2.2, but it was all about Facebook and Google. Those two stocks account for 42% of XLC, and they both had very strong weeks. Moving right along, financials. This is an area that I highlighted last week, over actually a week ago, in the sense that this area has been trying to reverse this very lengthy downtrend. And of course, this area is dominated by bank stocks. I'm going to share with you explosive move in an area of financials that's really going to capture not only that list of stocks that are up today, but in general, very, very interesting. XLY, consumer discretionary, and one of the stronger areas pulled back this week, but really holding in well. The consumers are continuing. There's a lot going on that I want to share with you in this consumer discretionary space as individuals' consumer spending is up sharply. I'll share with you some of the metrics used for that. And then, of course, we can take a quick look here at some of these weaker areas. And this was really quite surprising. Technology was the worst performer for the week, down 2.2%. I'm going to share with you where that weakness was and what to be on the lookout going forward with technology. And it really is a big week for these guys next week with earnings. So moving right along, I do want to take you down, drill down a bit further, and provide even more insight beyond those broader sectors. Same 2-month daily view, and this RSI descending. And as we get into some of these ETFs, it will make sense as to the relevance. It's going to have a lot of high growth areas that I follow very closely, as well as slower moving, because it's not all about growth all the time. We want to see where the money flows are trending so that, again, you can participate in that and take advantage of that. So first up here, we have the 10-year US Treasury yield, and take a look. It's reversing this really lengthy downtrend. This is a daily view. I'm going to pull up a weekly to give a bit more in the way of perspective, and you can see the significance here as we are seeing the interest rates rise. Now, this is going to have an impact on a couple of areas as we move on. So there's going to be certain significance there. And then also small cap stocks were up this week, the only of the broader indices that was up. So we can see a nice bounce here in small caps. As we move on, I'm going to share with you where that strength is. It's all going to tie in quite nicely together. And then XRT, this is retail. I mentioned to you consumer spending, consumer confidence, and we can see. So really what is happening to spill the beans, if you will. XRT is an S&P ETF of retail names, but this is all about online retailers. These are the names that are in here. It's equal weighted by and large. It's not a heavyweight. Hopefully, we'll get into a couple of names in there, but this is an area of vibrancy. But what is occurring is the holiday season is beginning to, it's starting earlier. I'll say that, and we'll all uncover how that is being displayed. And then also we can see semiconductors. These are some of these higher growth areas that I follow super closely. Software stocks, IGV is the ETF, and then semiconductors, both underperforming and by a fair margin, I will say. So these high growth tech areas are seeing a bit of weakness, but we are seeing that they are pulling back orderly, finding support. So we are going to take a look at playing the pullback, what you're going to be on the lookout for a potential reversal there. So that is a view of the markets drilling down. Going to take a brief break here, and when we get back, we have lots more to cover. We'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my biweekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this biweekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. I mentioned to you using StockCharts.com and this market movers screen. And what I do want to share with you is the significance of paying attention to this. Uh, Certainly, you can do it daily if you're so inclined. But what I'm going to do today, and this is going to be the percent up, I went ahead and did it earlier in the day, and it actually shifted as the day advanced. So I'm going to share with you from this morning those percent up stocks on the S&P 500, the top 10 that were up the most. We're going to take a look at a 2-month daily price chart of each of these stocks. I'm going to share with you why they were up. From my work, that is going to be very relevant. Is it up on a rumor? Is there news? Is there significance? Do you need, should you pay attention, if you will? And then also, I'm on the prowl for themes. Are we seeing stocks of a particular group starting to outpace? Are we seeing that kind of a theme? So let's just take a look. I'm going to take us through each of these stocks, why they were up, and then also take a look at their charts to know what you may or may not do. Are they interesting as far as compelling? Is there a continued move? Let's take a look at this first stock. This is SVB Financial. This had been a big winner for us in the past. It's a super uh, it's hard to say it, but it is a high growth. It's in the banking industry. The stock does have, they started out as Silicon Valley Bank years ago, so they're heavily in tech, but they do an awful lot than just banking. They have a very vibrant asset management team. They do a lot with funding and lending to new companies and that type of action. So what we can see here is a gap up today, but it was all about earnings. The company did come in with very strong earnings. The stock was on our MEM Edge watch list. I sent a report out yesterday, a Thursday alert, and I was on the prowl for a pullback as a buying opportunity, but did not get that. So we can see the stock gapped up. Now, here's what's interesting to me about that is this really high volume. It's exceptional compared to historical precedents here, and that's telling you that institutions want in, and that's going to be very, very interesting to me. So from here, because it is, we can see overbought, the RSI is above 70. I'm going to go to an intraday chart and see if we can get a little more in the way of perspective as to how. So here we are. I had this stock on our watch list. It had a significant move yesterday in response to earnings and then really just trailed off for the day. Now, while we did get that gap up on the open, it was not a gap up that you could have played based on certainly my view as far as being very familiar with intraday charts. You would need to see at least another two up bars, but it really just trailed off. So this intraday is unfortunately not really giving us, the only signal it's giving us is the stock's predisposition to gap up and fade, gap up and fade, similar to these other areas here. So not particularly helpful. But let's go back and take a look at some of these other stocks, why they gapped up, and again, look for themes. FLS, this is Flowserve. So we can see that the stock had a really nice base breakout. Take a look at that volume. RSI is positive. MACD just turned positive. So this is, by all metrics, a very, very compelling looking chart. We are not totally broken out of this multi-month base, but it really looks quite interesting. Now, unfortunately, there was not any news. So here's what you can do if that is the case. You can go ahead and get what's called a full quote. What it'll do is provide you with the industry group that that stock is a part of. Oftentimes, when a stock has this kind of gap up, heavy volume, no news, it will be because other stocks in that industry had news. So I went ahead, did some research there for you. If we have time, I'll show you, because really what you can do with StockCharts is go into that group and see what other names are popping. I'm not sure if I'll have time, but I did do that. I went into, by using that full quote view, I went into industrial machinery, and here are some of the names that really popped today that are also within Flowserve's industry grouping. This first one is AIMC Altra, a smaller industrial stock. Take a look at this gap up on base breakout, big volume, all about earnings. The company came in with good numbers. Another one in this industry group, same as FLS, is BOOM, and another one, but not as compelling looking. This stock also gapped up, big volume on earnings, but take a look, it gave up an awful lot of its advance into the close. Not what you want to see, but more importantly, this is how you can use this percent up screen to your advantage as far as uncovering perhaps themes or industry groupings. Let's move along. DHI was a mover, one of the higher up names earlier today. Of course, DR Horton is a home builder, and we can see that the stock did sell off. And I talked to you about interest rates rising, mortgage rates are increasing. This has had a lot of people selling off some of these. Actually, most of the home builders did suffer this week, despite two of the other companies, Pulte and MTH, had really stellar earnings on Thursday, but not, the markets were looking more closely at interest rates and other characteristics. But what I did want to share with you is we've had this break below this key 50-day simple moving average From my work, I would exit the stock because statistically, when you see breaks below the 50 on big volume, there is more downside ahead. Now, what are we going to be on the lookout for going forward to tell us that it is potentially safe, because the numbers are still really quite strong for DHI and any number of other housing stocks? You will want to see that break back above that 50-day simple moving average with an RSI and MACD also presenting positive above 50 signals. Let's take a look. We're moving right along here. XLNX. This company last week reported their earnings. Take a look at this huge gap up on earnings, big volume. However, it did not hold the gap, so to speak. It held it fairly well. Um, what you do not want to happen with gaps up is for the stock to sink back to its prior levels, and it did not, so we are still holding in well. What I like about this XLNX is they are in that semiconductor. Again, we can very easily go to that full quote if you want more intel here as to what group it's a part of. Semiconductors are looking quite constructive, and we can see that the stock pulled back just barely to its 21-day simple moving average, and this 10-day over here, you're going to get this grid. Your 10-day is at 116.31, and we closed above that 116.82. That's, from my work, bullish. The RSI is also positive above 50, as is that MACD. But again, it was earnings driven as far as that upward move, and you like to see that. That's indicating that earnings are coming in vibrantly, and I'm not going to spend a lot of time on this next one. This is, oh, actually MSI Motorola. This was a stock different than I thought. This stock gapped up today because of an upgrade, and they did get a price target upgrade as well. It's trading at about 175, up to 199. Is new price target. But the reason I'm pointing this out is because MSI is due to report their earnings next Thursday. When you see an analyst boldly come out, raise their price target and their earnings outlook within a week of their earnings, that statistically is very positive. Really, most analysts are not going to put their neck on the line unless they have some intel, or not intel that's not public, but they have perhaps some sense that it might trade higher. Let's take a look, make sure I'm using the proper list. UAA is Under Armour. This has been a turnaround. And actually, this list is a little different, but we can still go through it. It's still going to be helpful. Under Armour is in the throes of reversing its downtrend. So this actually is something that I pointed out in a couple of other really down and out retailers that have been able to potentially reverse their downtrend. I covered this stock a while back when it reversed its downtrend here. This is Abercrombie and Fitch. Had been an old winner, certainly in the 90s, but they are getting their act together here. So this is what you want to be on the lookout for. Another former leading retailer that's reversing its downtrend is Urban Outfitter, gap up, great earnings. Abercrombie, their earnings were okay, but management was guiding higher. But that is that particular stock. I don't want to stray too far from here. I do want to get back into some of these other stocks and share with you why they are gapping up to help give you a sense of where we are in the markets. This is Hasbro. HAS is the ticker symbol. Couple of things here. Gap up 2.5%, huge volume. And this company does provide a nice 3% yield. It had a nice 1-month base breakout. Actually, it's about a 3-week base breakout on volume. So very, very constructive. I'll tell you why this stock is up today, because they are due to report earnings on Monday. Analysts are raising estimates going into that earnings. But I did go ahead and take a look at another stock in this group that had news, and that is, oh, Mattel, pardon me, M-A-T. I'm wondering, gee, that chart does not look what I want it to see. So this is Mattel, M-A-T. Take a look. It's up almost 10%. It was up a bit more earlier in the day. Huge volume on that gap up, all about earnings. And what I did want to share with you is Mattel, they had blowout numbers on any level, every level. And they're expecting, actually, Barbie is coming back into vogue. But this is another all about the concept that the holiday season is starting soon. Management is, they are talking about it. Management of some of these retailers are beginning. I'm going to share with you one other company that was in this percent up for the week earlier today, and that is Discover Financial, DFS. And we can see, take a look at this big volume. This is also earnings driven, another base breakout, long base breakout, big volume on earnings. And what I did want to point out to you here is that management, of course, these are credit card companies. They are tuned in very much into consumer spending. And September was up. It was the first month since the pandemic that this financial services credit card company did see an increase. They said retail sales, grocery sales were enough to offset the decline in travel. A lot of these bigger MasterCard, Visa, Discover, their highest profit margin area is when you go overseas, when you travel and use your credit card. But again, they are seeing, DFS actually coined the phrase that October is the new December. They're seeing a really advanced sales as far as people getting ahead of that because of delivery potential problems and so forth. So I did want to share that with you. So I'm going to leave it at that with that particular segment because I did want to share with you the significance. Let's go ahead and move on. Take a look at some of these companies that are due to report earnings. And I will tell you pretty much every FANG stock is due to report. We have Apple, Amazon, Google, Facebook, and Microsoft, and that is huge. Microsoft is going to be the first. They're due to report on Tuesday, and I would argue the stock is holding in well. It will be closely watched. And what we can do also is take a look at some of those bigger names that reported last week, just to give a sense of where we are. One company that did come out with numbers today, big gap up. This is Boston Beer. Take a look at that huge volume, and it closed the week in the upper portion of the trading range. So really quite bullish. So overall, I get a sense that earnings season is really coming in rather nicely as far as reports and then the market's reaction. That would be barring certainly Netflix, where earnings were not really paid attention to. It was all about subscribership. And we can see this big drop down here. What I want to share with you here with Netflix, if you see that kind of gap down on earnings below key support, that is definitely your exit sign, particularly when you get big volume, similar to what we are seeing with what we did see with Netflix. One other area that I promise that we could certainly take a quick look at, and that is gaps up on earnings, because I've shared with you a number of stocks that have done so. We're going to go back historically, take a look at stocks that gapped up on earnings earlier. This is Bed Bath & Beyond. This is picture perfect. This is what you want to see after a gap up, the stock continuing to advance rather than filling that gap. That is not constructive. Stock continuing in a nice confirmed uptrend. But more often we will see, particularly with big cap stocks, this is Nike, gap up here, strong earnings. The stock has not advanced above that gap up because this is a really big move. The stock gapped up to 130. It was about an 8% advance, and it's really still digesting that big move. RH is another one that had a gap up here, and we have still not advanced above it. This gap up for RH was, sorry, it's Restoration Hardware, was actually up 20% on one single day. So it's going to take a little longer. We can go back historically with stocks such as this, and you'll see these gaps up, consolidate, and then a potential uptrend from there. So that's using history as your guide. I am going to leave it at that. For those of you not familiar, take a look at my MEM Edge report. I'm going to help you really stay on top of these markets, navigate this earnings season, as well as the volatility going into earnings. And I have a special offer, so use that link. Everyone, have a great weekend, and I will see you next Friday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.